In this video we're going to talk about how you would answer questions regarding the current and financial account. These are all from your booklet and just giving you a bit of a help in how you would go about answering these questions in significant detail. Explain why Australia often experiences a balance on goods and services surplus and yet still experiences a CAD. Australia often runs a balance of trade surplus because the total value of our exports of goods and services credits often exceed the total value of imports debits. Try and mention these terms credits and debits whenever you possibly can when you're answering these types of questions. You could also say that we have a strong export sector. We lots of demand for our commodities helps us to achieve the balance of goods and services surplus. However, the balance of merchandise trade and net services, which represents our balance of goods and services, are only two sections of the current account. So while they are sometimes in surplus, they're not the only things that's included in the current account. The main reason for Australia's running a current account deficit is due to our higher net foreign debt. This requires servicing through paying interest, which is a debit in the primary income section of the current account. Therefore, Australia pays billions of dollars in interest each year and also gives foreign aid to other countries, which both contribute to a current account deficit. So even though the first two accounts are often in surplus, our primary income and our secondary income are always in deficit mainly because of the large amount of interest and partly because of increased foreign aid. And they are all debits, and use the term debits and credits whenever you possibly can, and that's the reason that we experience a CAD, even if we have a balance of trade surplus. Why does an increase in GDP tend to have a negative impact on the current account balance? An increase in GDP is generally associated with increased import spending. As Australia grows, we have higher incomes and more employment, and when we have higher employment, we generally spend more. And whenever Australians spend more, a high proportion of that will go onto imports. This causes a debit in both the balance of merchandise trade and net services. So if you get rich and go on a holiday, or if you're getting a job and go on a holiday, that will cause more importing. If you buy more products online or from overseas, that will cause more importing, and therefore causing the current account to push into deficit. Don't use the term bigger and smaller when you're talking about the current account. Don't say to make the current account balance get bigger or smaller, because that doesn't mean anything. You've got to say it actually makes the deficit bigger or the surplus bigger or something like that. Make sure you mention the terms deficit and surplus. Explain how an increase in the unemployment rate might affect the balance of trade. Again, it's kind of like the opposite question here. An increase in the unemployment may actually have a favourable effect because essentially less Australians have money, and therefore that should reduce import spending. People with jobs will generally import more because they've got more money to spend. More people are on transfer as opposed to factor income, and therefore have less money to spend on imports. High unemployment rates also keep wage pressures down, which will make our goods and services more competitive through lowering cost of production. So higher unemployment rates are also good for keeping our wage pressures down, which makes our exports more competitive, because when there's high unemployment, there's more competition for jobs. So you could talk about the fact that we import less because of our less income, reduced income, or the fact that wage pressures are reduced, so we may even export more for that question. Describe the relationship between the current account and the CAFA. So the current account and the capital and financial account, basically is always an opposite relationship. The higher the current account deficit, the higher the capital and financial account surplus. They are always in balance. And the reason for that is because the financial account services the current account. The bigger the deficit in the current account, the more we have to spend to fund it. And essentially the more we finance by either borrowing money or by selling equity. And when we borrow money or sell equity, that's all credits in the financial account. So the more debits there are in the current account, the more we need to finance that with credits in the financial account. And that's why the financial account is in surplus, because we borrow lots of money and because we sell lots of assets. Provide two examples of transactions that are recorded in the current account and distinguish those from another two transactions that are recorded in the CAFA. Transactions in the current account have no future obligation. That's the key thing you want to get into this question. And this would include gifts and foreign aid or to other countries, as well as debits and credits for exporting and importing. They have no future obligation. Okay, so you should be able to name a couple of things that are part of the current account, because we've studied it in quite a bit of detail. The transactions in the financial account have a future obligation and would include loans from other nations, as well as the selling of equity to foreign citizens. So clearly articulate that one has a future obligation, the other one doesn't. They're the main differences, and then provide a couple of examples and your goal for that question. Provide two examples of each. And lastly, exactly the same question. Transactions in the current account, no future obligation, which is unlike other accounts like the government issuing bonds or direct investment, which is like buying shares. That would be included in the financial account. Thank you.